Good morning, everyone. Sorry if I clear my throat or cough. I am a little sick, but I'll try and get into it. So, basically, today I'm looking at this consolidation really. See where we're moving sort of sideways. Give me a sec. So getting up this morning, we're in a consolidation, and one thing also midnight open. We gotta mark that right there. So we're moving sideways, right? And we're failing to really displace beneath this order block on the hourly chart. This is a very strong level holding price, and so we failed to get beneath that low, and we immediately retrace again. So the way this candle is closing, we got 12 minutes. It looks like it's gonna inverse this hourly gap. So right now my attention is on the relative equal highs, and yesterday I wanted to see, if you take off the wicks, no wicks. Yesterday I wanted to see this high here get hit. Instead we did an OTE or retrace into this range and then drew lower to the order block. So now we have relative equal lows, relative equal highs. Not the highest probability, to be honest. And that's acceptable because if you look at how much this week has moved already, right? Tuesday, Wednesday, two major expansions. A lot of people are thinking retracement, so there's a lot of liquidity probably lying up here, and we are in a premium. So I'm very uncomfortable right now, trying to target that buy side liquidity. This might be like one of those days where the afternoon is better to trade, to be honest. But let me delete that. And I apologize for the messy chart. I just don't like the messy charts. Pisses me off sometimes. Alright. So 9:30, we're 9:45 usually. That's when I start to look for trades. And I'm going to be paper trading if I take anything today. So what I'm currently seeing is just that 9:30 we're making a run higher. This could be maybe a Judas swing, right? But we would need to really be volatile in order to come all the way back down and fill this Judas swing, like make the Judas swing higher and then come back down beneath it and distribute lower. We need to be very volatile to do that. But right now, right, like on the regular trading hours, we came back to a breaker here. We had that short-term run on stops into the bullish order block on the hourly chart. And now we're expanding higher back towards these highs. So that's what I am looking for on a regular trading hours gap. But I just don't see anything that, other than earlier this morning, which is pretty nice. But right now we're in that phase where if you look at the range, or above that 50% level, once we, after 9:30, it's kind of too late. So I'm just in the process of watching this deliver higher. I could look for like this inverse fair value gap. There's a bunch of 1 minute fair value gaps, down close candles that I would want to see respect price, but to trade off of these, we're way too much into a premium, and it's just better to just not do so. But instead, I could wait for these highs to get hit and maybe we get a reversal. However, that could only happen in the afternoon. I'd expect that more to happen in the afternoon. I will be leaving my screen a lot because I've been trying to do everything I can to avoid symptoms getting worse. Because usually I still go to work, I still go to the gym even though I'm sick. And I have to focus today. So I don't want symptoms to get into the way. But I will be probably getting up a lot to blow my nose. It's starting to, that symptom where there's a little bit of pain behind the eyes because the pressure's built up in your sinuses and throughout your nose with all the snot and stuff. It's starting to occur, so I'm getting up a lot to blow my nose. Oh. Also, another thing is this London range is pretty big. If you look at this run, the London session, pretty huge. Asia trended, London trended. It seems like now New York is trending. What was the hourly? What's this hourly box? Oh, yeah, the inverse fair value gap. So if you use this range and we go ahead and compare it to other London sessions, right? So yeah, okay. Let's from midnight to 6 a.m. That's the London range. This one is pretty huge, and we had a pretty bad New York session. Well, I didn't like it because we didn't. I don't know. Like I don't like all these wicks, but yeah, 10 did have a nice move, and then that was it. It was only like one nice move. But compared to like this range, this is normal though. It's just slow because of CPI. But you want to do this and just kind of like see if you take an average, is this range bigger than that average? And yes, it is. So don't expect too much for New York. Either it's going to be super volatile and it's going to really like slice in one direction, and just think about it'll either just consolidate and build liquidity, or it's going to think about, okay, who can I hurt the most, right? And I think in this case, it's the people that are at the highs, right? Like yesterday, I didn't like how little we cleared this high here. You see how we barely got above it? Like, the thing is, we got above it pretty far up, but this happened during a news release. I know that there wasn't enough people willing to respond to price being above this high during that news release. And from where the bodies are, if the bodies were a little bit closer to these bodies, okay, maybe, but we're all the way down here. And if you go to the 1 minute chart and you go back to when that high was swept, right? That high was swept. It took 1, 2, 3, 4, 5, 6, 7, not even 10 minutes. Price was spent above this high. I had it at 9:30 open. So I wanted to see during 9:30 open price run back up here, not above this high, but just above the buy side liquidity, London highs, and it instead sold off. So I think we have unfinished business at those highs, which is why it's possible that it just it targets that today. There's a pretty large fair value gap here too. It's pretty wide, so I would look at that. You have that fair value gap on the 15-minute chart too. So I'm refining that 15-minute fair value gap then to the 5-minute. So let's make that visible on the 15-minute. Like that. Then you also probably have an order block. Just a couple up close candles up here. The next hour, we'll see where this closes. So it closes here. We could see the next candle run down maybe into this inverse fair value gap and then expand, something like that. And I'd expect that. And then because we have those relative equal lows at the down here, looking at the bodies too, relative equal lows, that's something that I could see price come back to. This is sort of like what's happening right now. If you go to a line chart, right? People probably thinking that we're selling off a little bit. We have this little wedge, and I don't know the wedge patterns. I don't remember them exactly. Let me see. Wedge pattern. I don't know what it's called. It's not the wedge. Falling flag. Okay. The flag patterns. So that's what the market is seeing. That's not what's going to happen. It's just that what the market is seeing. And so you can use that to your advantage because you know that where most liquidity will be. So this is sort of what they expect to happen. See, where is most liquidity right now? It will retrace. People will start to buy this. They'll make a little bit of money. But as soon as it gets above here and it closes, now people think that the flag pattern is going to break out. That's when they buy, when it comes to retest. So you expand this and then you go up. Hello, pen. You go up and you come back and you go up like that. That's not going to happen. Like, I don't look for that to happen. Instead, I look for it to go up, run up above buy side liquidity. Then everyone buys when it comes back here. It may go up a little bit, retrace into this range, and then it goes lower. Because that's most of the market is thinking that it's going to go higher. That's what I'm looking for. So that's why I want price. That's one reason I want price to come back up to Thursday's high, because the bodies are showing that we're in this bull flag pattern, and I want to sell the idea, convince the market that we are in a bull flag pattern, just to fuck them over, I guess you could say. That's how I think when I'm in the chart. After all, 90% of people lose money, right? But you can make money trading patterns and stuff. But that's not why people lose money. It's not what they trade. It's who they are. That's why they lose money. I want to see maybe if we're willing to fill in this candle, immediately rebalance, and then not trade into that 9:30 candle. If that happens, I would expect a really quick run to buy side liquidity. Alright, so I'm back. I had to go blow my nose, and I came back into my room, and I need to blow my nose again. So I had to go back to the bathroom to blow my nose. But if we do come down to this level and we immediately rebalance it, still wouldn't, still wouldn't really be looking for trades because we're up into a premium. So that just, I don't really like that fact. But and really, I would only be looking to buy underneath that 50% that you see there, the 0.5, because that's when price comes into a discount. Even if I can see it run higher, not trade into that fair value gap and run higher, I'd rather wait to see if this idea fails and it actually does get back to a 0.5%. But if it does do that, I think that people may be thinking this is a bearish order block. But I would stick with my first idea that it's going to run to the buy side liquidity up here. But I'm not going to force that idea. If price is in a premium and it's easier for it to sell off, I won't force that idea. I'll just watch it and tape read it as it gets up there. I've used the 50-minute fair value gap. Watch how the bodies respect to that 50% and midnight open too. see, hope you can understand why I'm dropping into the lower time frame here. We had price come to this candle, immediately rebalance this left 945 candle. Did it fill the 930 fair value gap? No. It tapped into it and it very quickly ran up. I'd like for the wicks to stay above that 50% level and still leave a good portion of this fair value gap as a breakaway gap. Right, a breakaway gap is a gap where price did not trade into. It did not, and spend any time other than when it was delivering higher in this gap. And we also have this fair value gap right here, which is a balanced price range. So this is where I'm going on lower time frame and I'm looking for reasons to be buying. And I see on the second chart, the 1 minute chart is not too much, but there's maybe actually no. But on the 30-second chart, there's a nice fair value gap right there. It's a balanced price range, right? So you have this inverse coupled with that. That's a balanced price range. So I'm gonna just use this 30-second gap, and if we get above that, we wicked away from it. If we go back there and we get above it, that could be something we use to run up. But because we're in a premium, nothing stops us from coming back down and consolidating throughout this whole area. That's why I'm just studying the delivery to the highs, right? And if I'm wrong, well, there's no risk, but I'll have more, the odds of me being wrong are going to be higher. So this is why I'm not looking for any big trades, and if I take anything on paper, it'll be lower probability and it's going to be a quick scalp. If we don't show a lot of bullish price action, this would look like an order block, and this is where, because now it would be a bit more two-sided, I would hold on to my higher bias, my bias of running to the highs, but it's possible that it forms this order block, it comes back into it, and then it goes lower. Because what are we doing? This gap at 930, we're not really, we're starting to kind of fill it and show that we want to continue going lower. So because of that, because now it's becoming two-sided, where we can go higher or lower. Well, initially I wanted higher, but now it's looking like we could go lower. Because it's two-sided, I am not doing anything. And so I said if it would drop down here, I wouldn't be buying. If it comes beneath the 50% and it shows something very strong, then I can consider it. But I don't expect it to do that, and I'll have to reevaluate once if we do that and we come back to the 50%. But I really want to, if there's any time we should go higher now, it should be now. Or else we're probably going to continue consolidating or running lower. There's a nice 1 minute fair value gap there that we could maybe inverse. And again, this is also a balanced price range. If you look on the left side, we have the fair value gaps here. And so it's possible that price is in the state of delivering lower here, and we are going to go lower. Take off that balanced price range. Let me just mark this. I'd like to go long here. We had, a bit of oh no. That there was a nice 30-second fair value gap here. I want to see it close above that 1 minute though. Looks like it's gonna do that. So I might have missed it. I don't know if it's gonna come back down, but I want to wait till it closes, see where it closes. At this point, the wicks would be very high if it comes back, so I don't really expect it to close beneath that fair value gap. This should inverse here. 10 more seconds, but I want to see if it's gonna come back. It may not come back, to be honest. So yeah. I gotta be careful though, because we could be coming back just into this one. I wouldn't really want to go back beneath these fair value gaps. I wanted to use this as support and go higher. But that isn't a trade idea, right? Because remember, I said since we're already past that 50%, I'm just in a state of watching it deliver. ES is a lot lower, right? So it's clear to me these lower lows that the S&P is making all the way since Wednesday. Wait, hold on. When was? Oh wow. Wow. That is like a complete different index right here. What? They're supposed to be moving the same. Well then, this is very low probability, just the way these two are looking. But once the Nasdaq starts to trade lower, wow, the market will really dump. Alright, so we're approaching 10:30. Um, it seems like it got above that short-term high, and it just doesn't want to run. So you might be attacking back to these lows. I would still be willing to see it go higher. Nothing. Well, the thing is, we have that 15-minute, I guess, PD array. We're in a premium. We just reached above midnight open. We ran a short-term high. There's reasons why you could look for shorts. I think if you see big bearish fair value gaps, we could use those as inverse and continue to climb higher. We're only really retracing maybe to create liquidity at these highs, and so it's just a lot more higher resistance to get up to that buy side liquidity, because you're looking at the other assets, and like the S&P 500 is drawing lower. The Dow is drawing much lower. Like the Dow is insanely uncorrelated with the Nasdaq. It's pretty crazy. Like the Dow's all the way back down to this low, and it's just trending lower, while the Nasdaq is moving sideways. And so it's showing a big wrestle between what the Dow wants to do and what the tech wants to do, and the tech sector is really holding the markets higher. So we're not like in a true bearish stock market, right? Because the tech is holding it all up. But if you look at, if you look at the stock market generally, without the tech sector, we would be in a bearish market, because the tech sector is so big and so strong. In my opinion, it's a big bubble. We are pulling the rest of the market up and creating high resistance conditions, like low probability. So I'll mute the mic. I might stay for another 10, 20, I don't know. We'll see if it runs up and hits that high, and then I'll probably get off. I have work to do. There's a big move lower. I wouldn't be scared of buying here and see it run back up. Well, you know what? Let's try it. Run a paper account. Put a stop loss down here. Take profit at the relative equal highs. We're going to take something off at the relative equal highs. We'll take half off. So now this huge fair value gap, I want it to be an inverse, and I'll add like 5. If we close above that. And I would move up my stop loss too. Actually, I'll add 10, since technically I'm moving up my stop, so my risk is becoming tighter. Actually, I'm not gonna add. No. I'll just look for 20-point scalp. No, actually, whatever. It's a paper account. If I was on a live, I would look for just 20 points. So I don't like seeing that, the rejection from this fair value gap. So like right here is where you could take, half off. But we're gonna let it stop us out. Yeah. Alright. And fortunate. We got wicked. No, it's okay. So yeah, so that's why I don't want to trade it up into premium, right? Because, well, we've shown that. Let me get the executions off. Right, we can consolidate a lot and come back down to a discount, and it might hit this area, and then it might go higher, and then I might be tempted to go back in and be like, oh, it's going higher now. Now it's gonna work, and I go in and I try and trade again, and this is a trap, right? It could work, but I just be risking more money in a low probability condition. The safest thing to do was to wait to see if this would be inversed and then add, but that was a bit too high up in premium, and well, we're already above that 50%, and so as I try, if we come back down beneath the 50%, I would be willing to then look for something else, but we'd be too far into the morning anyways for me to continue. Actually, wait, we might do it now. Let me enter here, because the idea is we took out these lows. I'm going in with half the leverage, try and make back some what I lost. I'm gonna go in with like a 20-point stop. So we had this is like, if you look at the consolidation, we reached discount and we've traded beneath these relative equal lows. So now I'd want this order block down here, the hold price. If we don't respect that 50% of the constant encroachment of the wick, I would close out this trade unless it starts to run up like now. So I would be moving on my stop here. These are setups that I would now consider taking on a live account, right? If we're seeing this to get closed above, that's something I consider taking on a live account. And we leave, especially if we slice through it and leave a fair value gap, that's something I really want to take because it's likely to come back in there and have a balanced price range where it finds more support on. And that there's that red level, right, that inverse fair value gap that we could come in and consolidate a little bit in, find a bit of resistance. But I'm looking for the relative equal highs. I'm gonna put it up here, but I'm gonna sell half, or not half, but most of it at those relative equal highs, so that for the day I'm up once it gets there. But see, here's where I could consider adding. So I'm gonna add, if it comes back to that fair value gap, I'm gonna add 5, and these order blocks should act as a reclaimed order block. So it might show a little bit of resistance, but it should act as a reclaimed order block. So I added inside this small gap. But there's probably a, yeah, there's an inverse on 3 minute there. Yeah. The 2 minutes looking nice, and a 3 minute. Yeah, that fair value gap there. Right here. Okay, we've closed above that order block. Another place you could long on. Another PD array you could use. We have this one over here. Ugh. Looks disgusting. Oh. We're still in that, respecting that fair value gap. We're gonna touch this up my way so that we don't see the bad execution. Notice how the bodies respected that 1 minute fair value gap. So also another thing is that 15-minute gap, we're now above it, so we should be using that as support. And let me take this off. No. Get out of my screen. Alright, oh, I missed it, maybe. I don't like how prices is moving here. It's just, I mean, it's still expecting levels, but it's just consolidating. I don't like that. It's tempting me to just, if I look at, 6. If I look at, we're up for the day, so I've had the, I've considered just closing the trade up here because I have work to do. We're 11 o'clock, and I think we could get one more run out of this consolidation. Could be a turtle soup. So I think what we'll do is we'll take out most of it when we get up into this fair value gap, and then we'll start choking the rest of the trade off. Because you know how I am. I don't like to stay in trades very long, but this is a paper trade, so I'm allowing it. If it comes back, like at this point, hold on, my stop is break even for sure. I really don't like that. That doesn't look good at all. If we don't respect this, like that's it's GG. So I mean, maybe it could work. Could add 2 more, maybe. That's okay. I just talked about getting out, and I want to add 2 more. What the heck? The better place to add would have been here instead of there. But hold on, 1 minute open. has me paralyzed. I still have the same question in front of my screen that I'm just not able to answer because I keep getting distracted. Damn, it really doesn't want to run up there. Maybe I'm just on a lower time frame too much. I gotta like. I'm starting to lose a lot of faith in this trade. So I move up my stop to cut it off. You know what? Let's keep it down here. I'll add 2. I'll just put a still break even stop. So now we got to add. I want to slice through that. I will definitely take. And I guess up. Oh, yeah, no fucking way. it might come all the way back up. Whatever. You know, it's clear from the 15-minute chart, at least, that this is just not neat at all. And that's why I considered taking something off. If I wasn't alive, I would have taken something off up here. Because when it wasn't running up here, it wasn't delivering quickly after this entry, and it came back like around here. When it retraced and it created this down close candle around 11, I was like, I'm not too certain about this. And then I wasn't adding because, you know, it's a paper. You know, I could have held a regular stop, but it's just that I have actual work to do, and I don't want to be in trades for very long. I've been on the charts longer than I wanted to, right? So I'm going to be away from the charts and focusing on my work now.